All right, today we are diving into a really fascinating story about Allegiant Air. Their latest earnings report dropped, and let me tell you, the headlines screamed one thing, but Wall Street, well, they heard something completely different. So let's unpack this thing because it's a perfect example of why you can't always judge a book by its cover.
And that's really the big question, isn't it? It just doesn't make sense on the surface. How does a company report a loss and then its stock price just shoots through the roof? Well, as we're about to find out, the real action was happening just below the headlines.
And this slide lays out the paradox perfectly. On one side, you have the news that everyone saw first, a clear earnings miss. But on the other side, a massive 19% stock rally. So what on earth did investors see that the rest of us missed? To figure that out, we've got to start with the bad news. Okay, first, let's just look at the numbers that caused all that initial drama. This is the stuff that hit the news wires first, and let's just say it did not look good. So you can see it right here. The miss was pretty obvious. When it came to adjusted earnings per share, that's EPS, the experts were expecting a loss of about $1.79. What did Allegiant post? A loss of $2.09. Ouch. Revenue also fell short of what everyone was hoping for. I mean, by any standard measurement, this was just not a great quarter. And the market's first reaction? Totally predictable. The stock immediately dropped more than 6%. I mean, that's the logical thing to do when a company misses its numbers, right? But then, the earnings call with investors started, and the entire story just did a complete 180. And that big turn is all about a huge strategic move the company made. A move that had, believe it or not, absolutely nothing to do with flying planes, but had everything to do with their future. See, this is where smart investors started looking past that quarterly report. The really big news, the thing that was actually driving value, it wasn't hidden in the last 3 months of operations. Nope. It was all about a single decision that was going to change the whole game for them. That's right, an airline. Allegiant had spent years and a ton of money building this massive resort in Florida called Sunseeker. And on that earnings call, they announced the sale was officially done. This one transaction, this is the key to understanding why the market suddenly got so excited. So why was this such a big deal? Well, selling that resort meant Allegiant was going back to being a pure-play, ultra-low-cost carrier. You know, investors want an airline to be an airline. They want it to be lean, focused, and amazing at what it does. This giant resort was seen as a huge distraction, something that was sucking up money and management's attention. And getting rid of it had all these immediate perks. It was like taking an anchor off their balance sheet. It let them pay down over $181 million in debt. But most importantly, it sent a crystal clear message to Wall Street. We are 100% focused on being the best airline we can be. And investors absolutely loved that. So with that big resort distraction finally gone, investors could suddenly see just how healthy Allegiant's actual airline business was. And when you dig into these numbers, honestly, they're pretty incredible. Get this, a 99.9% controllable completion factor. What that means is, for all the things they can actually control, like having enough pilots or making sure the planes are working, they basically didn't cancel a single flight. In an industry that's famous for delays and cancellations, that is just, wow, that's world-class reliability. And it gets better. At a time when the price of everything is going up, Allegiant actually cut its core costs by 5% compared to last year. For an airline that built its entire business on being low cost, that kind of discipline is everything. But this number might be the most impressive one of all. While their competitors were seeing labor costs explode by double digits, Allegiant kept that increase to just 0.5%. That's a massive, massive competitive edge. So the picture was suddenly clear. The airline itself was being run exceptionally well. So let's connect the dots here. You've got a simplified, clear strategy. You've got a core business that's running like a well-oiled machine. Now management could finally give investors what they'd been waiting for, a really confident look at the future. And this chart says it all. The company didn't just raise its profit forecast for the full year, they absolutely blew it out of the water. They went from projecting earnings over $3.25 a share to over $4.35. That's a huge jump, and it signals they expect an amazing end to the year. And at the end of the day, by just getting back to basics, Allegiant totally won back Wall Street's trust. Just like this quote says, the analysts loved the new clarity. They could finally value Allegiant for what it is, a super efficient airline without this risky resort business confusing everything. And that brings us right back to the beginning. The stock didn't rally in spite of the loss, it rallied because of the brilliant strategic pivot they announced. Investors weren't buying last quarter's results, they were buying a much clearer and much more profitable future. It's really a powerful lesson, right? When you're looking at a company, the headline number, that's just the start of the story. The real gold is usually found when you dig a little deeper and understand the strategy behind the numbers. And that's the thought I really want to leave you with. In a world where we're just bombarded with headlines and instant takes, the real story, the one that actually matters, is almost always waiting for you just beneath the surface.